Zillow just announced their latest housing market forecast for 2025 regarding home values and home sales in the United States. So if you guys are just curious about their forecast, or if you're looking to buy a house this year, then this video is actually for you. I have a lot to share in today's video. I'm also going to share a lot of other details regarding what they're saying here in their forecast. They actually just posted this a few days ago. It says Zillow's latest forecast anticipates that home value growth in 2025 to be weaker than previously expected, with existing home sales projected to rise only slightly upward or only slightly higher compared to 2024, which is pretty wild. I'll share some stats regarding that. Last year, we had a 29-year low in home sales in the United States. So they're projecting for only a small increase compared to last year. Although mortgage rates may moderately decrease by the end of the year, any changes are likely to be minimal, keeping a lid on home buying demand. Before I share some mortgage rate forecasts according to Fannie Mae, I also want to share this with you guys as well. This is according to CNET. It says mortgage interest rates saw a mild recovery this month, but housing market experts say that does not change housing affordability very much. Actually, it was quoted in this article. It says buyers are still feeling constraints of low housing affordability, says Jason Walter, which of course is me. I'm a member of CNET's Money Expert Review Board, by the way. Of course, I have a decade of experience. Like it says, U.S. home prices are up by 3.5% or 3 to 5% higher compared to last year, and average 30-year fixed rates have been stuck around 7% for about 2 months. Therefore, because housing affordability is still a big issue due to elevated rates and home prices, it's going to keep home sales relatively muted this year, much like 2023 and 2024. I also said this as well. The good news for homebuyers, though, is that housing inventory is rising and more homeowners are opting to list their house for sale. We're actually seeing a bigger increase this January compared to previous Januaries regarding new listings. So speaking of mortgage rates, let's have a look at Fannie Mae's latest forecast through actually 2026. Here's our average 30-year fixed rate. So the average in 2024, let me go above, was at 6.7%. So the entire year last year, overall for the year, was at 6.7%. Now here's 2025. Q1, their forecast is calling for 6.9% to be the average 30-year fix, then to decrease only slightly down to 6.6% by the time we hit Q4 of 25. Look at 26 though. Their forecast is basically at 6.5 to about 6.6%. So more or less paid at around 6.5% in 2026. So therefore, they're saying that the average rate is going to be 6.8% this year, and then a decrease to 6.5% in 2026. So in other words, if this is actually correct, for about 2 years, the average 30-year fixed rate is going to be paid around 6.5 to 6.9%. However, according to Fannie Mae, though, they are not forecasting that home prices are going to fall. In fact, their forecasts call for a 3.5% gain this year, followed by a 1.7% increase in 2026. Going back to Zillow's real estate market predictions, it says Zillow's forecasts of home values are calling for home values to increase by 0.9% in 2025. That is a big decrease because when I made this video 1 month ago, they're calling for a 2.9% increase in home values. Now it's only a gain of 0.9%. Now here's the reason. New listings were higher than expected out of the gate this year. This is for January. And inventory expectations were also revised higher and have put downward pressure on their forecast for home values. In other words, we're seeing a sharper increase in the measure of people opting to list their house for sale, which is causing inventory to rise as well, which is also due to the fact that home buying demand is low as well, which is also putting upward pressure on inventory. And that's causing their forecast for home values going from 2.9% this year only to a 0.9% gain in 2025. Now here's their article regarding what happened in January in regards to new listings and inventory levels. So new listings increased by 60.7% month over month in January. So compared to December, it rose by 61%. I will say that this is not seasonally adjusted, so it's very unusual to have a decrease in new listings in January compared to December. Obviously, a lot of people want to wait after the holidays and list their houses in January through April, for example. In my market in Sacramento, new listings tend to peak in May, but really have a low level activity in December, to say the least. Anyways, we're up by nearly 61% month to month and 11.5% compared to 1 year ago. So January this year compared to January 24, we're up by 11.5%. However, despite these gains though, we're still lower compared to pre-pandemic levels. It's 16.2% lower in fact. In regards to active listings, which is the amount of houses actually for sale or inventory levels, that was up by 17.6% this January compared to January of 24. However, we're still down by about 26% from pre-COVID levels. In other words, if you're a home buyer looking to buy a house, it's great news to see more new supply in the market and also more houses for sale as well overall. But it's still down compared to 2019, for example. Obviously, real estate is local. So in Texas, Tennessee, Florida, they have more houses for sale compared to 2019, whereas in California and of course parts of the Northeast or much of the Northeast has a lack of houses for sale, to say the least. And go figure, the areas that have more houses for sale compared to pre-COVID are areas in which home values are going down or they're really slowing down. But of course, in the Northeast, that's one of the areas in which we have a big increase in home prices by double digits from 1 year ago. All right, going back to Zillow's article, it says existing home sales are forecasted to reach 4.11 million in 25, consistent with last month's outlook. I also believe it was at 4.11 million, exactly the same. With little relief in sight regarding rates, existing home sales trends are expected to closely mirror those of 23 and 24, remaining below pre-pandemic levels. And here is in my humble opinion, a really good way to kind of share that. Here's a data poll I pulled from the National Association of Realtors to show the total number of houses that actually had sold going all the way back until the year 1989. So in 24, there was just over 4 million existing home sales. That, by the way, was a 29-year low, the lowest level since 1995, and down by 0.7% from 23. Then forecast for 25, according to Zillow, 4.11 million. That'd be a small increase up by 1.2%. Now, this is pretty crazy because if that actually comes into fruition, we'd be missing around 3 million transactions in a 3-year period because the average, or I should say the median number of transactions since the year of 1989 is just under 5 million transactions per year. But 23, just over 4 million, a little bit lower that in 24, and 25 at 4.11 million is forecasted. This technically would be the highest number of home sales since 2022, but it's still approximately 900,000 fewer than the long-run average of 5 million transactions. Also at 4.11 million, that would actually be equal to what we saw back in 2008. Let's look at that. 2008, 4.1 million transactions, which is pretty crazy, right in line with the past couple of years. If you guys are curious how other companies are forecasting what will happen this year, here is a kind of summary I pulled for you guys. So again, Zillow, 4.1 million sales, prices to only increase by 0.9%. Again, a big downward revision compared to the 2.9% gain they were previously forecasting only 1 month ago. Fannie Mae, 4.18 million transactions, a gain of 3.5%, much higher compared to Zillow's gain of 0.9%. Redfin is calling for sales to be at 4.1 to 4.4 million. They give a range, and prices up by 4%. Realtor.com is calling for just over 4 million transactions and home prices to rise by 3.7%. So as you guys can see, not a single company here is calling for home values to decrease in 2025. And that's likely due to the fact that we have a lack of houses for sale nationwide, again, down by 26% compared to pre-pandemic levels. In other words, if you guys want to see home prices absolutely crater, you need to see supply way up here and demand way down here. Right now, we're not seeing that because we still have a lack of houses for sale nationwide. Hey, don't take my word for it. Have a look at this. Here is data from NAR, or the National Association of Realtors. So the all-time record high regarding inventory levels was back in 2007. So overall for the year, we had 3.5 million houses for sale, all-time record high. Now looking at this January, the most recent trends we have from them, we only have 1.18 million houses for sale. So overall nationwide, we're still down by about 66% compared to the all-time record high that was set back in 2007, right around the Great Recession. Additionally, their records go back to the year of 1999 at 1.18 million. That's actually fewer than any other year leading up to the Great Recession since 1999. All right, going back to Zillow's forecast. And by the way, if you guys are getting any value out of today's video, then please hit the like button and greatly appreciate that. And also consider subscribing as well. Anyways, it also says here that as elevated mortgage rates dampen demand for home purchases, many potential buyers are staying renters for longer. Therefore, Zillow is forecasting, which I also agree with them regarding this. I also expect that single-family rents will grow at a faster pace compared to multifamily due to the fact that multifamily construction was several months ago at all-time record highs in stark contrast to single-family construction. And it says that here, with apartment construction slowing, the growth rates for single-family and multifamily rents are expected to converge more closely than in recent years. So in other words, because we had all-time record highs for construction of apartment buildings several months ago, I want to say this is mid-24, late 24, but because the construction of multifamily units is actually slowing down, the gap between rent, or the growth rate in rents for single family and multifamily is actually going to get a little bit more narrow this year. And with that said, what do you guys think about the forecast for Zillow as well as these other companies as well? Also, what is your housing market forecast this year as well? Please leave me a comment below. I appreciate you guys so much. Also, if you guys want a real estate agent referral, then of course, check out my website, which is realestateteamfinder.com, or you can email me if you're looking to buy or sell a house in Sacramento, the greater Sacramento area, or the San Francisco Bay Area as well. And again, thank you everyone for watching today's video. Please like and subscribe, and we'll see you in the next video.